Yes, welcome back. Today we are going to learn about recoverable debts and allowance for recoverable debts, which are important concepts in accounting. So, as you know, business often sells goods and services on credit, expecting customers to pay later. However, not all customers fulfill their obligations. Some debts may be impossible to correct. Here, accountants also must record these losses properly and also estimate the future losses that may arise from the current credit sales. So by the end of this lesson, you will be able to distinguish between recoverable debts and the allowance for recoverable debts. So let's begin with the recoverable debts. The bad debtors, or the bad debts, this amount outstanding from the debtors which has already proved irrecoverable. Some debts may not pay their accounts for various reasons. As you have said, when the debtor is not able to pay his or her account, this becomes a bad debt. So therefore, the firm should write off these debts from the accounts, and that's become the loss. So it should be charged to the statement of profit or loss as an expenses. So what are the causes of recoverable debts? It can be caused by the death. If the debtor has died, there is no way you're going to collect that amount, so you have to record it as a bad debt. Yes, we have also the bankrupt. When the court has declared that someone has got a bankrupt, so you are no longer going to collect that amount. You have to record it as a bad debt. So any other incapacities. So bad debts are expenses in the statement of profit or loss, and it reduces the receivables in the statement of financial position. Here we have an example. We have receivables. These are the people that you have sold our goods on credit. So you less the bad debtors that has already been written off to get the net receivables. So where you go, you have to note this. An amount of bad debt appearing in the trial balance does not reduce the receivable because the adjustment has already been made. If you're given a question and you find that in the trial balance there is a bad debt, you don't have to reduce that amount to the receivables. The adjustment has already been done. You have to deal with what is in additional information. So bad debt recovered, a firm may recover a debt that was previously written off. Such amount is treated as an income in the statement of profit or loss. Here, if you have already recorded that some amount will no longer be recovered, and later you recover that amount, you have to record it as an income because to set off that amount, because in the previous period you have recorded it as an expenses. So to remove that amount as an expenses, you have to record it as an income in statement of profit or loss. So let's go to allowance for bad debts, the provision for bad debts. This is it's like you estimate the amount that some amounts owing from a debtors may not be paid, may not be recovered. It is based on the doubt, and some debts may prove recoverable in the future. Yes, you assume the worst. That let me assume like 1 million will not be recovered. So then you provide a provision. You estimate a such amount that will not be recovered, so that if that amount is not going to be recovered, your business will keep operating because you have provided a provision. You have provided a provision before. You estimated that before it happened. So the principle is assume the worst. An estimated percentage or amount of receivables is provided for possible future losses. The allowance for recoverable debts is usually made often bad debt has been written off. So let's see the example. The following detail relates to debtors for the year ending 31st December 20x6. We have 3 years 20x7 and 20x8. So in the 20x6, the debtors were 240,000. The bad debtors, we have 40,000. Allowance for recoverable debts, it's 5%, and there is no recovered, bad debt recovered. So in the year 7, we have 360,000 as debtors. We have 70,000 as bad debts. We have also allowance for irrecoverable debts for 5%, and also in the same year there is no bad debts recovered. In 20x8, we have 310,000 as a bad debts. As data, sorry, we have bad debts as 60,000. The allowance is 3%. So we recovered the 25,000 as a bad debt recovered. So the required, we have to show the receivable account, recoverable debts account, allowance for recoverable debts account. We prepare, we extract the statement of profit or loss, how those are going to be recorded in this statement. We have also to prepare the statement of financial position. We have also to show the account for bad debts recovered. So let's start. So I have already tried to calculate in 20x6. As you have seen, you have the debts for 240,000. We have bad debts for 40,000. So what we do to get the allowance for recoverable debts, we shall get the total for receivables we have, we deduct bad debts. So on that amount, we multiply the percentage for allowance. So to get the allowance for recoverable. So in the same as we shall do in the 20x7, we shall get the receivables, we deduct the bad debts, we multiply the percentage for allowance to get the allowance for recoverable. The same also we shall do in 20x8. We shall get the receivables, we deduct the bad debts, we multiply the percentage for allowance to get the allowance recoverable. So what are we going to do on the allowance account? What are we going to show? Remember, take note of this. In the first year, we record the whole amount as it is, as you have seen in 20x6, we have 10,000 as allowance. We shall get this, the whole amount, record it as how it is. But in the next year, we don't record the whole amount. We shall see that we shall record the increase and increase and increase in that amount. Yes, we shall get the, we shall compare what we have in 20x7 as 14,500, then we deduct for the previous year. This was an increase. If it is an increase, it is recorded as an expenses. If it is a decrease, it should be recorded as an income. As you can see here in 20x8, we got an allowance for 7,500, which will give us the decrease. If estimated that 7,500 shall not be recovered, and we in the previous year we had an allowance for 14,500. So you see there is a decrease. There is a decrease compared to the previous year within this year. So this decrease should be recorded as an income. So as we have been saying this is the extraction of the statement of profit or loss, where what will be recorded as an expenses in the first year. We have an increase in allowance. For the first year, we have to record it as the full amount, but in the next year, 20x7, we record only the increase. Yes, we record only the increase. So you will get the bad debts plus an increase for that year. As the same here, you get the bad debts plus an increase. So what will go in income in 20x8? We shall get the bad debt plus and decrease, as you have seen in the previous. Yes, the decrease was 7,000, the increase was 4.5. So this is what you do here. You record the increase as an expenses, you record a decrease as an income. Yes, as an income. So what is being recorded in the statement of financial position? You record the data as how like respectively to the years. Yes, here in 20x6 it was 240, as we have seen, and to 20x7 we have 360, 20x8 we have 310. So you less the bad debts respectively. You also less the allowance, the full amount, not the increase. Remember, take note of this. We record here the full amount for allowances, not an increase. The increase and decreases are being recorded in statement of profit or loss note statement for financial position. Here we deduct the whole amount to get the net receivables. Yes, to be recorded as under net non-current asset. Sorry, current asset. Yes. So here we have also important notes to pay attention on this. In statement of profit or loss, the bad debts are only for the, yes, as you have said, the one is in trial balance is already been adjusted, so bad debts written off. If not in trial balance, it's what we record. By the one which is in the trial balance, we don't adjust it in receivables because the adjustment has already been made for recoverable debt expenses. Let's see the receivable in statement of financial position, how it's being calculated. You shall get the receivables as you are given in the trial balance, then you less the bad debt written off. You also raise the allowance for bad debt as you have seen, then you got the net receivables. So when dealing with allowances in the first year, as you have seen, you record the full allowance as an expenses. In the subsequent years, you compare the new allowance with the older allowance, yes, to get an increase or decrease. So the increase is being recorded as an expenses in the statement of profit or loss, and then the decrease is also being recorded as an income, as you have seen by the example. So let's test our understanding. Which statement is correct? A. The bad debt increase. The bad debt increases the receivables. Does the bad debt increases the receivables? B. Allowance for recoverable debts is an asset. C. Bad debts recovered are treated as an income. Receivables increased by allowance for bad debts. What is the answer? The answer is C, as you have seen. The bad debt recovered are treated as an income, because in the previous you have estimated that it will not be recovered, and you treated it as an expense. So then by the time it is now recovered, you have to set off that amount by recording it as an income to be cancelled by the other expenses you recorded in the previous. So question number 2, bad debts written off are shown in the statement of financial position as a deduction from cash. Do we deduct bad debts from cash? No. B, capital. Do we deduct it in the capital? C, receivable. D, inventory. What is the answer? The answer is C, as you have seen that. Question 3, an allowance for recoverable debts is collected because. The answer states an allowance for irrecoverable debts is created because all debtors will pay. Is that the reason why we provide the allowance for recoverable debts? Some debts may fail to pay in the future. The business has excess cash. It is required by the law. It is not required by the law, and it is not because the business has excess cash. The reason I have seen it's some debts may fail to pay in the future. What is the answer? The answer is B, as you have seen this. So if the allowance for recoverable debts increases in the year, the increase is treated as an income, an asset, expenses, or liabilities. I repeat the question. If the allowance for recoverable debts increases during the year, what happens? The increase is treated as an income. We have seen where we record the increase in what? In recoverable. What is the answer? What is the answer? The answer is C. It is, if it is an increase, it is recorded as an expenses. If it is an decrease, it is recorded as an income. We have seen this. Yes. Question 5, the last question. If the allowance for recoverable debts for the recoverable debts decreases during the year, the decrease is treated as an expense, an income, an asset, and capital. Have said this every time. It is recorded as what? As an income. Yes, thank you for your attention. God bless you. See you in next session. Thank you.